I mean, in the last 2 3 weeks, the macro data releases in the US that have been ahead of expectations. I mean, in this time we have also witnessed a shift in commentary coming in from both the Fed and the analyst community at large. From rate cuts starting in June or perhaps July of this year to no rate cuts at all this year. I mean, what's your sense of things now? After the inflation data that came out in the US.
Hi, Suyash. Morning. Always a pleasure to be on your show. Look, I think you are absolutely right when you say that the data is coming extremely confounding in terms of what the equity market was expecting. Look, but my sense is we will have to someday. I think the market narrative will have to change in terms of a good data has to be considered as good data, and a good data does not possibly relate to bad equity markets, right? And which is what continues to happen in US. If you see the moment a good in core CPI inflation or the core inflation going above expectations, we means that the US economy is extremely hot, is doing extremely well, better than expected, right, at many counts, and there is robust demand on the ground, which is good, which augurs good for the economy, right? But perhaps equity markets have been treating them negatively, and many a times we have seen that this inflation data, the reading from this doesn't last too long, and which is what has again happened in US. Yesterday overnight, again the markets were up a little. The bigger heavyweights on the Nasdaq were all up. Yeah, day before yesterday when the print came in, markets just reacted negatively, and I think markets tend to take these data in stride because finally a good news is good news, right? It does not relate to a bad equity market at all. But yes, the expectation of a rate cut definitely gets pushed down the order a little. Markets were, I think, anticipating around 50 bips of rate cut. I think that anticipation is now lowered down to around 45 bips of rate cut. The consensus estimate, though my sense is still it might just get pushed a little because the data doesn't seem to be easing off, right? The inflation is extremely hot out there, and perhaps I think everything gets pushed down to the fag end of the calendar year, maybe closer to US presidential elections, and then we don't know how politics weigh over economics at that point in time. Right. So I think as of now, yes, it seems unlikely that the rate cut is coming whatever in the month of June. So my sense is markets have already taken that in stride and have pushed down the expectations on rate cut.
All right, and Mohit, I mean, something really interesting going on because our markets have pretty much, are not bothered by the global headwinds that are coming our way. I mean, domestically things are looking great, right? Data releases have been strong, inflation has come off nicely, and even in March, the expectation is that we'll see a further decline below 5% potentially. Also 2024, by the way, is expected to have a normal monsoon, so that should prop up rural economy. But what do you think? I mean, what's your sense of thing is, what's going on in the West? Do you think that will come back to haunt us, or has it already been absorbed in prices, sir?
Look, I think Indian economy continues to remain a very strong point globally. Honestly, I think domestically we don't see any what do you say wrong signals coming as of now. Inflation, as you rightly said, should come off below 5% mark after a long time, which is a great reading or a great print. And even the IIP data and other data should come in strong. The earnings should be neutral this quarter, perhaps, and with a good monsoon likely this year. I think Met is forecasting 102% kind of a monsoon season, which is a very good monsoon if that happens, and I think that should prop up the rural economy as well. One thing which we haven't seen in Indian economy as yet is the rural demand picking up, and second is the private capex. I think these are two very big items which need to pick up for the entire economy to run as an engine. And my sense is the rural economy should pick up with the election spending and with a good monsoon. I think it'll be a cherry on the top. Private capex, I think we will have to wait till the election season is over. Only then could we see the private capex engine coming up. But my sense is if these two engines kick up, then there is no stopping the Indian economy. We definitely have run ahead of expectations. The markets are extremely hot on valuations and everything. But I think that's a known, right? It's not a risk which is any longer being factored in. I think the only risk which market has to be cognizant of, it's not the yields, because Indian yields will continue to remain soft by virtue of JP Morgan bond inclusion and a lot of bond monies coming in. The only risk which I foresee in the near future is twofold. One is oil prices shooting up dramatically, and B, a geopolitical escalation, which I think is related to oil in a manner. So if the Iran-Israel escalation flares up a little and the oil flares up, then that's, I think, a very big negative for India. But other than that, I don't think so. The Indian economy or the Indian juggernaut stopping for now.
All right, Indian economy may continue on its path, and that is continue on the bull run. But there are a couple of factors, especially on the global front, that one needs to keep an eye out on. But gentlemen, we are also kickstarting the earnings season, the Q4 earnings season of India Inc. And first, that will come out, first sector that will start reporting its earnings will be the IT sector. Amit, I'll come to you first. TCS is scheduled to report its Q4 results post market hours today. What are the expectations?
Despite everything in IT being a laggard in the last 1 year, TCS is projected to report a revenue jump of 1.35%, net profits up almost 9% quarter on quarter, EBITDA up 4.5%, mostly on the back, and they have beaten most of their peers. Likely to beat most of their peers, whether it's Infosys, HCL, or Wipro, on the back of the deals they won, revival of the deals they won with BSNL and the banking and financial segment. In the December quarter, they had won deals up to 8.1 billion. They are projected to win on the back of the Aviva deal another 10 billion in this quarter. Coming to the stock itself, it is up now, but compared to the peers, Mohit, what do you make of TCS? It is leading the pack along with HCL in the last 1 year and persistent. But what do you make of it going forward?
Hi Amit. Look, honestly, I think in the large cap IT pack, it's very difficult to pick one name against the other. Though TCS has been a market favorite for some time for some time now, and I think the numbers also are relatively better than the peer group. There's a lot which is happening on the entire big names in the IT pack. There's a lot of cost rehashing. CEOs have changed on a couple of names, which is Wipro and Tech Mahindra. A lot of restructuring happening. I think perhaps which also shows and reflects that the market hasn't been easy for the big IT packs. Big deals haven't been easy to come by. For TCS per se, I think the BSNL one was a big one, and the Aviva deal also is a good one. So my sense is TCS will continue to lead the IT pack for some time now. The numbers won't be awe-inspiringly wow kind of numbers, but yeah, the numbers should be better than what most of us has been expecting, or just in line, right? Which is decent given the way IT pack has been struggling. TCS has done well in few pockets of the UK market has been good, but the overall Europe market has not been great for TCS, and the US market, I think they still continue to struggle. The dollar revenue guidance or the dollar guidance is also around 1.6 odd percent kind of growth, which is nominal, and which is what the street is expecting. So my sense is don't expect any great shakes in the IT big pack as of now. I think it is still 6 months away from a kind of a big turnaround. So my sense is it's a wait and watch kind of a scenario. Though I have been bullish on IT pack, and which I have voiced out in your show multiple times. But the expectations of rate cuts getting pushed down also pushes down to some extent what we expect from the overall IT pack.